Okay, let's continue the programming. The Nigeria's Bureau of Statistics yesterday released the report for the headline inflation, about 2.06% in the red, and other key macroeconomic indicators. Inflation also came in at 17.1%. How much impact would this ugly economic data have on commodity prices? Let's get a bit of a perspective into this. Valerie Nwoka is joining us live in the studios here from Financial Derivatives Company. Good afternoon. Thanks for coming through. I'm sure you weren't surprised these numbers came through. But let's start from inflation. Your forecast from FDC was 17.4%. We had 17.1%. That's not significantly different.
No.
Were you surprised?
Inflation is not only about the number, it's also about the direction. We got the direction right. We predicted that it will increase. The FGC inflation prediction was at 17.4 and the figure released was 17.1. It is well within the margin of error published by FGC. What this indicates is that it will inflation will increase, consumer prices will increase, but at a slower rate than previous times.
So what do you see with these numbers yesterday, still in the news anyway, still really hot? Do you see this 17.1%, you said, well, it's to the north, as it were, not heading south. So do you see any likelihood that consumer prices could taper off, could ease off somewhere, anytime soon?
There is some indication that, because if you look at the month-on-month figures, it fell from 0.9 to 0.6. So there is some indication that inflation will continue to rise, but at a slower pace.
Now, very interesting conversation there, but let's look at the GDP figure as well, coming 2.06% and inflation 17.1. What do you think the implications of this will be for agri-products locally, commodities, that is?
With GDP contracting by about 2.06% and inflation increasing to 17.1%, this creates a sense of urgency to roll out economic recovery plans. It will affect market sentiments and policymakers' decisions. We see the MPC meeting coming up soon. We expect that interest rates will be reduced. This will allow manufacturers and producers borrow cheaper. This will increase and could increase supply, and by the law of supply and demand, prices will fall. This makes monetary policy and fiscal policy in line with each other, and that's what we need in the economy now.
You look at, sorry to cut in there, you look at inflation and you look at the GDP and you're looking at the end of year buying activities as folks begin to prepare for the long various holidays all the way into the new year. So we're just about 120 days or less than that. Today's the 1st of September, so we're really close to that. So do you think the level of inflation we see now will keep, for example, the price of rice at about 23,000 naira per bag, back to about 8,000?
It may, no, with inflation still rising, it may continue to increase, but possibly at a slower rate. Maybe as policies come to play and we begin to feel the effects, prices may start reducing, but for now, as it is, it may still increase.
What do you think the government's doing? There was a confidence building statement yesterday issued by the Office of the Vice President. Later in the day on social media, on Twitter, the Finance Minister was also saying, look, this is not a walk in the park, it's a walk in the dark. It's going to take a bit of a time, but we're on course. Do you agree with this statement?
They have brought out their economic recovery plan. They have the bottlenecks, the problems with the economy that we saw in Q1 and Q2 have been alleviated. We've introduced the floating exchange rate system. We have removed the subsidy, which solved the problem of scarcity of fuel. The government has also begun spending. This is expected to help reflate the economy.
In the week, we have a lot of news coming through, some of them really positive. One of them was that the central bank, within about a week, lifted the ban on FX operations for those 8 banks with unlimited NMPC funds. So it looks like they presented a plan of how they're going to pay back. We're confident about their repayment schedule. Let's lift them, let's allow them get back into the FX market. You think this will help ease pressure on Naira-dollar relationship?
It was expected to help the Naira appreciate in the market, but then it did appreciate in the interbank market, but in the parallel market it didn't. This is because the market hasn't reacted to the decision made by CBN. Also because the parallel markets is also influenced by policy inconsistencies and the uncertainty premium. So this feeds in. This is also school fee season, so we're seeing an increase in the demand for dollar in the markets, which is why the naira actually depreciated in the parallel market.
September is back to school month, I remember. Back to school month, September. Everywhere in the world. September is the month everybody blames for a lot of household spending, whatever. You got to dip your hand in the savings because you got to go back to school. I just forgot that. But let's wrap it up. From the oil side, the entire GDP conversation and data since yesterday had been about oil, crude oil, the downside of our economy. Now the news, some good news is that Focados, one of the facilities shut down since February, has been repaired. Will go back into operations this month of September. Are you encouraged by this news?
Nigeria is more production sensitive than price sensitive. As we know, we're not a price leader, we're a price taker. So, and Focados resuming deliveries could possibly increase our production levels by about 200,000 barrels. This brings us to about 1.2 million barrels thereabouts. Although this is still far off from the 2.2 million barrels that the government budget was benched on, this is still a positive thing to the economy. However, we will still be facing fiscal revenue issues.
Okay, Valerie, thank you very much for coming through.